Yo, 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 ladies and gentlemen, welcome to a new stream. What's happening? What's happening? Hope you guys are all doing well. Let's make this a fantastic stream. I'm looking forward to talk about the Federal Reserve. Looking for a new trade as well. We are currently in a trade. We're going to show you guys in a second what we're doing at the moment. But we are in the US dollar, Canadian dollar long as well. Today was already a very good day with the team in Discord. If you want to join us, you can join for free. Links in the description. We do a lot of stuff in Discord as well. Absolutely amazing that you guys are here right now. Let's get the party started. Looking forward to talk about Jerome Powell. We're actually gonna listen to the speech as well. But before that, we're gonna do some analysis. And of course, if you see some trade opportunities right now, we take it. And especially when the news is coming out, potentially we can leverage, anticipate on this as well. So I hope you guys are all doing well. Absolutely fantastic that you guys are here. Our second live stream on YouTube of the year today. We have some private live streams as well. However, it's always good to be with each and every one of you guys. So let's get started straight away. Let's go straight away to the core of what we're doing here. Absolutely amazing. Who do we have in the building here? Beautiful. Johnny is back. Welcome back, John. Great to see you, Benjamin, as well. Amazing, amazing, amazing that you're here, my man. Jamie, my man, is back. Shout out to you, Jamie, Lucky Zondi, Erika, Fabio. Hybrid is back. Yes, a lot of familiar faces here. A lot of familiar faces. Crypto saying, Joel, Pip Destroy Chief. Hello, brother. I miss your live streams every day. Tuesday, Wednesday, Thursday. Pip Destroyer, Shorts, Switch Up Broadcast. DS, Hash Brown, Matty. Yes, sir. Crypto B. Daniel from Ecuador. Nice, my man. Natis, I'm back. 5% up, phase 1. Amazing, my man. Welcome back, man. Welcome back. Hope you're doing well, my friend. Wilkes says, feel good to be back. Yes, sir. Ready to rock and roll. Ready to rock and roll. As you guys can see, we traded this particular breakout here. The moment we broke that level, we took already our profits here. Why? There, of course, we have an area of supply there. Clearly, this specific moment. The dollar is making moves here. The dollar is finally showing some strength again. What happened here? We came back down significantly over the last couple of days. It was absolutely significant to move down after we came back up all the way. Let's zoom out a little bit more. After that, yeah, we're gonna get a profitable trade today. That's the goal. We're gonna get a profitable trade today, regardless. That's the vision of each and every live stream, to get a profitable trade. In and out, make our money, and we can go home. I can go to bed. You guys can stay awake. I'm living in Asia timing here. So so the dollar is coming down significantly here. However, it's making some moves right now. I think that is all preparation for, of course, the Jerome Powell meeting. We have some very interesting news coming out here in a second. Of course, it's the first speech of 2023. Most of the time, it creates some volatility, right? Some potentially unexpected news or something like that, you know. The projection for the year of 2023, it's very important that he makes a statement. Okay, this year we're gonna do this and that. That's the approach, right? So therefore, it's very, very important, and it can get very volatile. So do be aware of potentially, you know, what you're doing here in regards to your positioning. Make sure that you have this under control, because of course it can get very wild here. Also, never trade with money when we're trading together here live. Never trade with money that you cannot afford to lose, okay? We cannot always win, but we will not always lose either, okay? But do take that in consideration, all right? It's always a probability game. I want to put the disclaimer out there, all right? Making sure that you understand that it's not possible to win every single trade all the time. However, we have a significant history together already now, so things are looking quite good so far. So We're gonna go over a couple of charts with you guys. After that, we're gonna look at the potential outcome here. We have 40 minutes left for that particular news here. Maybe you can find a scalp in between. We have been scalping already during the London session. We have been chasing liquidity. We have been chasing equal highs and equal lows in Discord. Was absolutely amazing. A lot of fam made some profits as well. However, let's see if we can do the same thing in this New York session as well. So absolutely amazing. Andrea, welcome. Hope you do well. Nick, best friend is in the building. Hey Lorenzo, are you looking for any scalps today? Yes. Do you trade the US30? Yeah, we're going to talk about the NASDAQ as well. We're going to talk about the NASDAQ. Some interesting things for the NASDAQ potentially right now coming out. Absolutely. Absolutely. We are still in a USD cut position, by the way. At this particular moment, we are still in our position. We have seen that when this ever broke here, there was so much liquidity built up here. Let's also use this Asian session right now. For the people that know how this works, I think many of you guys do. What do we have here? Look at that. We have the London session, the New York session, the Asian session, the London session. What happened in all of these particular sessions here? And this one as well, by the way. Let me know if somebody knows exactly what I mean here. What do you see? What is so unique about the fact that we're seeing all of these sessions here? What do you see here? Yes, sir. You guys are completely right. Huge amounts of liquidity built up here. There has not been a single high taken out since Friday, okay? Since Friday, there was no single high taken out here. So this is the first time that we were taking out the Asian high, the New York high, the London high. That's the reason why we took this trade, okay? Not just because we saw a beautiful, you know, whatever, falling wedge or however you call this pattern right here, right? Not just because of that, not just because we saw the breakout, no. It's because we have seen all of these sessions here building liquidity without having that being taken out here, all right? The New York has been taken out, the London and Asian session here as well. So do take that in consideration. That was the approach here. So we use this tool as a very, very important tool to look for liquidity. And the liquidity is super important because this is what I think, in my opinion, the majority of the overall trades that I take is pretty much built on. So that's why I use this a lot here, you know, use this tool a lot here. So overall, we are right now in our beautiful position. Stop loss is on break even already. If you get hit, no problem. We have taken our profits already. Yeah, then it is what it is, and we can just go on and continue for a new potential opportunity. However, the goal of today's stream together is to find one winning trade, at least one winning trade here, so we can all have a good night of sleep. Okay? If you guys have any further questions, let me know as well. Then we can go over that. In the meantime, I'm gonna go over the dollar index real quick with you guys. What we have seen right now. Okay, we have been coming down significantly. We have been taking out again the lows here. We have been tapping into this particular area right now of the month. Okay, this is a breaker block. We have been tapping into that zone right now. So while we are in a strong area of the month right now for the dollar index, do take that in consideration. What do we see here? We have multiple reactions right now. We have to go back to the lower time frame right now because we have been consolidating and we have been breaking out of this particular zone. Change of character to the downside. Change the character to the upside, okay? So we have potentially a signal that gives us an indication, okay, maybe we can start trending upwards a little bit here. All right, so this is what we're seeing, potentially coming upwards, stepping into this particular zone right now. If that happens, where can we retrace from? Where can we bounce from right now? Well, we can actually come back towards this zone. I would not be surprised if we would come back towards this area. This is another zone as well. We have actually two zones we can take consideration right now. I'm leaning more towards, you know, a stronger dollar, especially because it's the beginning of the year. Jerome Powell can speak and so on and so on. I do believe that we have been coming down already for a significant amount of time. this could be the indication to give us a short-term pullback to the upside. I think I'm leaning more towards this, but hey, I am not a magician either. So yeah, let's just see and approach the market minute by minute right now and see how we can anticipate on that. So based on this right here, what do we see? Overall, I like the structure getting formed right now on the dollar. So that's the reason exactly why I use this as an extra confluence as well for the US dollar against the Canadian dollar, for example. There are some other charts as well that I'm interested in potentially, and that is the US dollar against the Japanese yen. And that is on the lower time frame. Let me show you guys real quick. That we tapped into that range. We came back down after creating that high, tapping into that zone here. Creating a lot of consolidation right now. Very, very similar. I see the same thing happening for the Japanese yen index. For the guys know exactly what the Japanese yen index is, I highly recommend you to use these a lot. I use these a lot as well. These are pretty much all the currency indices here for potentially, you know, the particular pairs you're looking for. So if you're looking for EURUSD, you look at the dollar index, you look at the euro index. Okay, this is what you're specifically looking for. Okay, trading view, you can have a look right there. You can take exactly these particular watch lists, you can take it and you can use it for yourself. You can add it to your trading view as well. Okay, so for now, what I think potentially can happen, same thing for the US dollar against the Japanese yen. Maybe we could come down here, potentially tapping into one of these zones here. And I'm going to look for a long opportunity of the US dollar against the Japanese yen here. There is many imbalances underneath or above here. And I do believe that there is a chance we can come back towards this range. It's the 133.223. So this is something I'm looking for in regards to the US dollar against the Japanese yen. Okay. So overall, we have a couple of beautiful setups. We are already in one of them. Then we can see exactly, okay, US dollar, Japanese yen. Could be another layer. I'm going to put an alert here for you guys so we do not miss what we are looking for here. Okay. That's the other one. Pip the story says, hi Lorenzo, I predominantly trade the US dollar, Australian dollar, US dollar, and I mainly look at the dollar index. Besides the Australian, the AXY, are there any other indices to keep an eye on that impact the Australian dollar, US dollar? You can use gold as a tool of reference because there is a correlation between gold and the Australian dollar due to the fact that that's one of the main commodities in Australia, leveraged and used for. For example, in Canada, it's the US oil. It's the oil or crude oil. New Zealand dollar, highly correlated to the Australian dollar. You can use this as well. So there are a couple of other pairs you can look for, but mainly when you look for the Australian dollar, US dollar, you can look at the dollar index. I mainly just look at the dollar index because it's the dominating pair. So let's go over a couple other charts right now real quick. Also guys, if you support the channel, we're going to crush this year. We're going to completely dominate this year as well. We're going to really step up our YouTube game. We're going to upload a lot of cool stuff on a consistent basis as well. Plus the live streams, plus more strategic content. Then smash a like of this video to really help boost the algorithm. You know how it works. So yes. Thank you very much. Let's go to the EURUSD. From scratch, real quick. From scratch. Okay, we came back all the way here. That's this particular zone. What do we see here? Again, a breaker block. What is the breaker? Where is the breaker? Right here. Look at how clean this breaker block is right here. Why is this a breaker block? Well, look at that. We came down. We created an area of demand. We actually swiped, took out the liquidity here. Immediately reversed. After the liquidity sweep, boom. Area of demand turned into an area of supply. What happened? Look at that. Beautiful reaction. And where we are now, exactly at that same location here. So we are in a strong daily area of supply right now for the euro against the US dollar. Okay, do take that into consideration. But that's the daily. That's what the daily is telling us right here. What do we see in the 4 hour? We tapped into that zone once, twice. You have to go a little bit lower time frame here. There we go. Beautiful. I'm going to use the 15 minute right here. Yeah. So what happened? We tapped into that zone. Daily area of supply. We started to consolidate. We broke down. Okay? We created a break of structure here. We came back up, tapped into that zone. Why? This was the last candle before we broke down. Mitigate into the specific range. Tapping into that range. And now again, what happened? We broke down again. So we broke down again right here. Okay. What do we want to see right now? Actually, it's a change of character. We credit break structure to the upside, change of character to the downside. What can you do here? Go to the 5 minute. Five-minute chart here. High to low. Couple of beautiful setups. Want to look at least something above the equilibrium here. So we can go back, we can scroll a little bit on the time frame. This is what I do. I go to the 15 minute, 10 minute, 5 minute. I'm looking for candles, particular candles in the market. This is one of them. That's number one I'm looking for. This is number two. Let's see on the lower time frame here. Broke that particular level. Or failed to break this high here. I think this is already a strong zone right now. Yeah, it's looking quite bearish at the moment here. I think there is a lot of imbalance underneath. So if you would give me a suggestion right here, I would go short for sure. EURUSD right now. Also look at the dollar. Dollar is showing some more strength. And I do believe we have some more upside potential. So I think, yeah, short to EURUSD here. This is my suggestion. I would definitely look for something like this here. We tapped into that zone. Again, it's also a breaker, by the way. We can use this as a tool of reference right here. This particular candle. We see that reaction. Let's look at the dollar for a confirmation here. What do we see with the dollar? Dollar is moving. But it's still facing the resistance here, of course, from these lows here. Once it's going to break these lows, it's going to go fast. We're going to go to this 103.5 range. Right now we're at 103.4. So we can make a move here. We can also still come down to tap into this particular zone. I would be patient. I would not rush it. Look at the chart here. I would look for either something here already on the lower time frame, or wait until we come maybe even a little bit higher to then look for a short opportunity for the EURUSD. Coming from the daily to the 5 minute. Forex education process. How you doing, Lorenzo? It's been a while. Nice to see you active. Thank you, my man. Shout out to you, brother. I'm back. We're back here fully live 3 days a week for sure. Then during the day, I'm also live. I'm actually going live twice. One time for the community in Discord and one time on YouTube. And every Monday, we're going to drop an epic video. So you're going to see me a lot, my man. This year, we're going to crush it. Looking forward to have a wonderful stream as well today. Cheers, my brother. Okay, EURUSD. That's my mission here for EURUSD here. I think that there is a big chance we can come back up a little bit higher still before we make that move down here. So I would not long from or short from this particular zone. I would wait a little bit more patient here and, you know, potentially look for one of these particular moves here. Look at the fixtures volume profile. Last thing we can add on. Showing this one. It's showing that the most. Let me extend it right now. Yeah. Okay, interesting. Massive amount of volume here. Okay. Beautiful. That's this zone here. This is why we use it. This is exactly why we use the point of control right now to determine exactly where potentially the most, you know, volume has been traded in that specific range here. So overall, we have this zone, point of control. More imbalance. Dollar is is looking better. Dollar is definitely looking better right now. USD CAD is stagnating a little bit. We start to consolidate right now. Let's go to a couple of other ones here. A says your YouTube channel is dope. Do you reckon $200 is okay to start with? That's more than enough. Actually, when you are new in trading, I recommend you to start with less. It's more than enough here. It's purely based on your skill. Build your skill. Don't think about the money right now. Money will come in. Money will come. Focus on building your skill. Don't think about the money from the beginning. That's what 90% of all the traders do. A huge mistake. That's how I messed up. By thinking about money too quick. I know it sounds cliche, but it's truly one of the biggest mistakes I make here. Thinking about the money rather than my skill. If I work on my skill first, then thinking about money, massive difference. Qualify says, is the scoreboard on the top left just from your scalp trades? Yes. Yes, sir. In the last 3 months already. So it's a bit older, but it's 140 trades. Every single trade was live on stream. Where's the cap? Yeah, good. I cut my hair, you know? New year, new hair. 20 minutes for the news, yes, sir. Okay, so what are we gonna do? We're gonna go over a couple of other ones real quick. So we are ready. Ready to rock and roll here. Let's go over the Nasdaq. I saw somebody asking about the Nasdaq here. Okay, Nasdaq broke significant highs right now. Of course, what happened here? A lot of stop losses built above that particular level. We have broken 2 significant highs here. So we have not just broken 1 high, we have broken 2 highs. So this is a very strong low here. This low is a very strong low. Okay, that's the number one thing I see right now. We haven't broken this high. We have broken this high in one particular move here. Pretty fast move here. So I do believe that if we come back down towards the zone, then this could be a move here. Let's look at the 4 hour as well. Yes, we saw the same thing happening on there. Let's confirm that also with another chart. Okay, when we look at the US 100, let's confirm that with another particular chart here as well, to make sure we are ready for the news as well. So let's put them together right now. Let's see if they are aligning at this particular moment. Where's the Nasdaq? Let's pick out the Nasdaq as well. Very interesting, very interesting. Gonna face a lot of resistance here. Okay. If we are coming up here right now, and if you're failing to break this particular level here for the VIX, let's go to the 1 hour. $15-minute. Then I stay quite bullish here. Okay, so yes, I do believe that this could work, definitely. If we are coming down right now, we can look at the 1 hour here. We can tap into that zone. Why? Because this move took out these particular highs. Strong particular high here. Massive reaction so far. I do like it a lot. I do like it a lot. So potentially I would potentially look for a trade setup, but I'm not going to enter straight away. I'm going to enter on the lower time frame once we are there to see if we can find some sort of confirmation at 10,870. Do we put a limit order now for EU or wait for the impact of the news? Then we lost the chance. So when we say lost the chance, that means that we are already scared to lose. So we're going to lose money. So that mindset needs to get out, bro. 100%. You want to make it happen. You want to do it. Forget about FOMO. We're only going to look for really solid setups here. We're not going to rush things. We really want to make money, but we want to do it the right way. So what we're going to do in regards to the EURUSD, or at least what I'm going to do right now, I'm going to wait for Jerome Powell. And the reason why is because it's not like a CPI or it's not like a, NFP or whatever it is, right? It's Jerome Powell. And he can literally say this in the first 5 minutes of the speech. And then in the last 5 minutes of the speech, he says the opposite. And then what happens? Guess what happens, right? We start this way going up and then we suddenly reverse. So we need to be very, very patient here in regards to Jerome Powell. It's not the same thing as we're seeing with, for example, the CPI when, it's green and okay, dollar bullish, short, what we did in the first year of the stream. First stream of the year when we took that beautiful GU trade. That was just okay, boom, boom, done. This is a little bit more complex due to the fact that there are more variables coming into play in regards to Jerome Powell. He can literally say this then, and then he can change his mind, and then it confuses everyone. And then suddenly the chart goes into one direction and then it reverses all the time. Happens all the time. So we have to be very careful as well. Very patient, very careful. So that's what we're going to do. We have 15 minutes to go, so I'm just going to scroll through some setups right now, guys. I'm going to scroll through some setups. I'm going to see which one is the most attractive right now for the next 15 minutes. And then potentially look to trade one of these particular charts here. One of them, what I really like is right now the Australian dollar against the US dollar. It's showing just a lot of weakness. Showing a lot of weakness here. We have a lot of imbalance underneath. Reasons why we should not trade during big events. I personally do trade big events. I like it a lot. I think for me it has been very profitable. However, if you don't know what you're doing, or you don't know exactly what your strategy is, or you cannot just apply your normal regular strategy usually. So you should be a little bit more aware and more risk. Your risk management should be very, very on point. So yeah, be very careful, do not risk or overtrade. And if you really feel that you're not ready for it, then do not trade news at all. And then just start trading when there is not news, when the volatility is a little bit lower, and just be a little bit more patient. But overall, I personally like trading the news. I like it. Gold, so yes, let's go over gold as well, because gold is right now is very, very interesting here. Gold has been acting very strong, like very strong. Like every time somebody says, okay, we're gonna go down now, we didn't go down. So gold is looking very, very good. So what I'm gonna do for gold though, if we break this level at 1867.993, I think I'm gonna go short here. So if you break this low, I'm gonna go short. And this is at the 3-hour chart. I'm gonna take it to the 1 hour. We have a couple of interesting zones here. However, if we break this particular level, this could be an interesting way to trade for gold here. I would take a little bit of a wider stop loss due to the news, but I would look for something like this here. Lorenzo, what's your goal for this year? Kindly share. Good question, my friend. Thank you for asking. My goal for this year is definitely building a beautiful community. Working on this, building it. Really leave a footprint right now in the industry, because we started out a couple months ago. And, you know, we had a lot of things to build. But now all the structures are in place, and now we can fully launch and scale. So yeah, that's my focus here. I'm not interested in 10xing or 100xing my portfolio, right? I like consistent profits every single day. So yeah, that just keeps going forever. And that's what I'm focusing on. Small profits every single day. Justice, is anyone else hearing audio feedback of Lorenzo speaking twice? Is this again the case here? Let me see. A lot of people had this indeed. Do you guys hear me twice or not? Okay. Are you with any prop firms or just using personal accounts? Personal account, and also, yeah, some investors as well. I'm doing also a prop firm challenge for the community to show that it's possible. I do this all the time on a regular basis. I will keep doing it as well. I'll show you an example of what I mean here. This is just what I'm doing right now for the community, just building these, doing these challenges, showing the community that it's possible, and then helping them passing a challenge. Okay, we have 10 minutes to go, guys. 10 minutes to go, looking forward to that. So yeah, in regards to gold, potentially this is something I'm looking for. I would take it down all the way to this fair value gap. If you break this low. Only if you break that particular low here. Somewhere around this this range here. Could be interesting. We have been building a lot of liquidity here. Do take that in consideration. We have been building a lot of liquidity over the last couple of... pretty much over the whole week so far. So yeah, I want to take this out. And it only depends on the dollar here. The dollar potentially coming up right now towards the zone. I mean, things are aligning. However, I want to see something getting broken first. I do not want to, you know, looking for pretty much a trade right now. I want to break this level first. Very important level. Bruno says, can you please show some of the content you make available? Bruno, can you please show some of the content you make available in the V2? Yes, you can go to get V2 access in Discord, and then you can see the video, and there is some more information. If you want a little tour of what we have here. Overall, we have a full video series as well. We have the live trading sessions, the live streams, the private live streams you can join. Prop firm challenges. We're gonna start right now. 8 minutes to go. Is that a sell stop order on gold? Yes, I'm looking for main. I'm just gonna enter market. I'm gonna enter market here. We already are in a trade here as well. We are already in another potential trade setup for the USD cut. Gold is looking interesting. We can go over one more. I think gold is definitely on the radar. We have 5 minutes left, so let's use this time wisely and let's prepare. And then we set up Jerome Powell here. John says, you are in a USD cut for buy already? Yes. We are already in a USD cut buy here. We already took 50% off as well. We're looking for a new trade right now. Gold is one of them where we're potentially gonna enter from. Chen Shen is back. What's happening, my man? Hey King, how are you doing? It's been a long time. Indeed, a long time ago, bro. You look exhausted. No, I'm good, man. I'm feeling great. Hey Lorenzo, do you think we can pause prop firm with good risk management and following your scalps on YouTube? It depends on you, man. It totally depends on you. Do you study economics? Yes. Absolutely. Ciao Lorenzo, how's the boxing coming? Good, very well, very well. Thank you for asking, man. Okay, 5 minutes left, 5 minutes left. Okay, gold's ready. Dollar, ready. Dollar is ready. I'm very curious about what will happen with the dollar after Jerome Powell here. It's gonna be super important what he was gonna say. The dollar is gonna really make a leap into one particular direction here, but it's gonna get volatile. US 100. Of course, filled up that gap that we had here. We still had a gap left right now. Yeah, it could be interesting. Some people say Bitcoin as well. Bitcoin is right now coming back towards a very important zone. This zone right here. For the people that trade Bitcoin, we are right now tapping into a very interesting area of supply here. All the liquidity above is taken out. So there is a big chance that if the dollar goes up, Bitcoin and stuff goes down, of course. Or the indices go down as well. And Bitcoin will follow here. So I will not be surprised if Bitcoin makes a leap up, reverses back down. Something like this. So tapping into 17,300 and then immediately come down. and takes out all that liquidity here. We're gonna see what will exactly happen with Bitcoin. I'm very curious as well. Are you gonna play the speech? Yes. There we go. In which trade are you in? We are right now in the USD against the Canadian dollar. We're almost at break even again. We took out 50% profit already here. And we reversed straight away. No surprise actually, but I still wanted to hold my position. Gold is something that I potentially want to trade. And I think that's pretty much it. The Nasdaq could be interesting. Let's see what we have. Euro, Australian dollar here. By the way, guys, we shared everything in here as well in regards to the USD cut as well. This is where we make that move. He already came down right now. We'll do take that in consideration. If you want to join, you can join. Links in the description or in the chat as well. You can join our free Discord right there. Okay, Jerome Powell will be live in 1 minute. Let's see if we can find him right now. Let's see if Jerome Powell is actually... Okay, let me check real quick, guys. Let me confirm this with you guys real quick. Okay, US dollar Japanese yen is interesting here. I just got a message. We are coming down, okay? We are slowly, steady coming down here. Yeah, it's gonna get volatile right now. Looking for the speech here. For some reason, is this one? There we go.
Questions that I outlined. And in the last 5 minutes, panelists will be able to make some final remarks. Okay, so now let's go to the initial remarks, at most 5 minutes for each of you. I'm sure these remarks will span many aspects of the broad panel theme, but by agreement, each panelist will put more emphasis on one of the 3 main questions that I outlined. So Ken and Mervyn will touch on question number 1, Claudia on question number 2, and
no, this is not it, right?
Question 3. So without further ado, please, Ken Rogoff.
No.
Well, first of all, thank you very much to the organizers, to the Riksbank, for inviting me to speak. I think you've heard so many remarks about Stefan. I can just summarize them in the central banking community.
Oh, the central bank community, yes.
A guru, that you don't know the answer, some hard question. He's a person you really can go to and get, a very deep answer to, and we'll hear more about that as things go on. I've been asked to talk about some of the early developments, more of the question 1 that we've had here. And I think the academic literature on this started in the 1980s. But of course, really it goes back among practitioners far earlier than that, but I'd say an especially important event was the Fed Treasury Accord in 1951 that set up the Fed to be an independent central bank back in the 1980s. That was a rarity still. The Bundesbank had achieved that, but most countries had not. My own contribution was to develop a theoretical model that would try to address how it would work, why it would work, and it was an answer to a very abstract question posed by Kydland and Prescott and Barrow and Gordon about why you might get stuck in high inflation and what you might want to do about it.
Volatility is incoming already.
My paper looked at various ideas, including using an inflation target, appointing people who already had a reputation for having a strong anti-inflation commitment. And needless to say, I was very inspired by the great Paul Volcker, who I was working below, very, very far below.
Dollar is coming down.
But I was working below Paul Volcker at the time when I was working on that. And there's been just tremendous amount of literature since, taking this to many places. I think you're all familiar with Europe, New Zealand, the United Kingdom, but I wanted to just really emphasize an area people don't think about as much, which are emerging markets. And Tobias Adrian really spoke about this, but I still think most people don't quite understand about the efficacy of the concept, about how important it is. European emerging markets, if you looked in 1992, there were 40 countries with inflation over 40%. And that doesn't even capture things because a lot of them had hyperinflations at the time. And to get out of it, the early solution that was tried in many places for a long time
took out all the liquidity above,
well, the dollar's
reversing
really
right now.
good, or let's fix our exchange rate against the dollar. And that was very good for those of us that want to study financial crises, but on the whole didn't work so well. There was really this period of transformation where some very bold emerging market central bankers got the idea, it worked in advanced countries, let's do it here. And I think there are many, but I would single out
not showing that much strength yet for the Nasdaq.
Guillermo Ortiz in Mexico, for example. And I think people forget, but when they were trying this, people thought, this is ridiculous. You can't be independent in these countries with these weak institutions. And the IMF also over time really played a very positive role here in pushing the idea. By 2015, inflation was actually very low across the world. It's not today, but even in places it seemed unimaginable, not just the former Soviet republics, African countries, with inflation under 10%, even under 5%, and indeed many people have forgotten, that central bank independence was ever needed. I invite them to read about Turkey, for example, where the president has fired central bankers the way Henry VIII changed wives, and you can see what's resulted there. I would say there are many refinements once you have an independent central bank of how to do it, and literature to which many people in this room have contributed. But I think the independence of the central bank is at the absolute central starting point to this. If you look at many of these emerging markets, they weren't really doing inflation targeting. They aren't really still doing inflation targeting, but they've used this as a device to establish their independence. Now, just to sort of summarize, I would also say there are so many things I didn't expect, and I'd just single out one. I'm surprised the extent to which central banks in everywhere almost are regarded as honest brokers. I mean, if you want to know what the data is, you go ask the central bank, and I think that
usually God we took 50% here. Thank God we took some money here. Stop loss then on break even. Stop loss got hit on break even right now. Liquidity is underneath, is going to get target.
Familiar with, but I think it's been very important, is the community of central bankers helping to support each other, exchanging
It actually tapped beautifully in this area of supply here.
There's been a huge networking effect in this, in providing ideas and also support when the whole central banking community.
Also keep in mind, guys, there is a chance that we can reverse as well. This is just the beginning of the speech here. Taking out the liquidity here. This doesn't mean we're going to keep going down right now. But let's see how it turns out.
Central bank independence has been under attack. I certainly don't think it's an idea, which is over at all. I would actually argue that the introduction of central bank independence has been the most significant positive development in macroeconomic policy since the Second World War. Thank you.
Well, Torsten, thank you.
So far coming down hard.
Good afternoon, everyone. Torsten's given us 5 minutes only, so I shall reserve my stories about Stefan and the resurrection of the British banking system in 2009 to conversation over dinner. I think it is impossible to understand the movement towards central bank independence without seeing it in the context of the great inflation of the 1970s and also the stagflation of the 1980s.
US 100 making moves.
The former was a consequence of, I think, in large part,
coming up right now.
Intellectual mistake at the time in thinking that there was a long-run trade-off between inflation and unemployment, so that tolerating a somewhat higher rate of inflation would make it possible to sustain a lower level of unemployment. But following the breakdown of
gold's getting a lot of pressure now
to gold and 2 large oil price shocks, discretionary monetary policy led to rates of inflation well into double digits, and in some cases, such as the UK, above 20%.
Getting pushed down.
As Ken said, in many emerging markets, even higher still. And the stagflation of the 1980s was the painful consequence.
We're right now really going to focus on the dollar index here. Indeed, I see a lot of people saying that it probably changed the direction. Definitely possible here. This doesn't mean anything right now. Well, it's really important to be patient at the moment. When Jerome Powell is speaking or something like this is happening, it can go in either direction. It's really, really volatile here.
Which had been made over many decades before, arguably most persuasively by Maynard Keynes in his tract of monetary reform. But the attempt to achieve it after the breakdown of Bretton Woods by rigid exchange rate links collapsed in 1992 with the departure from the exchange rate mechanism in Europe of both the UK and Italy, and the end of the fixed exchange rate links in Sweden, where interest rates had been, some of us remember, hard to think of this now, raised to 500%. And the same applied to Finland. Now, politicians drew 2 conclusions from the unhappy experience of the 70s and 80s. First, inflation was unpopular. If exchange rates were to float, therefore, then a domestic framework was needed to ensure price stability. And that framework was the adoption of inflation targets. And second, the measures required to eliminate inflation were also deeply unpopular, with high rates of unemployment for a while. So politicians found that setting interest rates wasn't actually much fun. So why not give that power to an independent central bank with a mandate set by Parliament? And those two conclusions led governments around the world to give greater independence to their central banks. And in most cases, this did go hand in hand with an inflation target. Now, the policy debates at the time in the 1990s are, I think, helpful in understanding the challenges to monetary policy today. But there are three important differences between then and now. First, in the 1990s, the memory of the great inflation of the 1970s was still vivid. Today, there is almost no one below retirement age who remembers the peak inflation of almost 50 years ago. And until recently, low inflation had come to be taken for granted.
I'm still aiming for
both
for the
by
dollar
economists who mistakenly assumed that inflation in the medium term was determined by the inflation target, and by the public who had stopped thinking and talking about inflation. So the constituency for low inflation, so widespread in the 1990s, has been somewhat eroded. Secondly, in the 1990s, the popular support for low inflation encouraged politicians to grant independence to central banks and to support them when it was necessary to raise interest rates. I think today governments can see only too clearly the challenge of issuing substantial quantities of government debt when interest rates are rising and central banks are no longer buying their debt. So external pressures on central banks are, I think, much greater now than in the simpler days of the 1990s. And third, when they were introduced, and I think this is in some ways the most important point, inflation targets were not seen as a theory of inflation.
US dollar, Japanese yen is here.
But today, in the models currently fashionable in academia and used by central banks, the inflation target is the variable that closes the model and determines the path of inflation in the medium term. But the original aim of inflation targets was actually to focus and change the way decisions on monetary policy were made. That is why inflation targets were accompanied by measures to increase the transparency and accountability of decisions and decision makers, respectively. Clear explanations of the reasons for decisions on interest rates were to be set out not as a matter of mystique by central bankers mumbling and saying very little. They were set out clearly in speeches, evidence to parliaments, and reports such as the Bank of England's inflation report. And although these innovations remain, I worry that model builders have tried to use the inflation target as a theory of what drives inflation. Because as a result, any deviation of inflation from target is assumed to be transitory, and policy mistakes followed. So I conclude really that an analysis of why many central banks were granted independence in the 1990s, along with the adoption of inflation targets, is clearly relevant to understanding today's challenges. Thank you.
Thank you very much, Thorsten. Thank you very much
Waiting for Jerome, of course.
to the organizers. And I was very honored to be invited here to speak on this panel on the occasion of the farewell of Stefan Ingves. For me, when I joined the ESRB, the European Systemic Risk Board, he was one of the founding fathers. He was already there, and I actually learned a lot from him in terms of the relevance of financial stability for monetary policy, the importance to need to act when it's needed, and the importance of clarity in communication. And I'm saying this not to break the rules, because actually rules are important, and that's going to be one of my main points here, but I'm saying this because I think this is all crucially important at the current juncture. As we've just heard, I think in some sense central banks have enjoyed a capital of inattention or rational inattention to risks to price and financial stability. We've lived in a period of very low inflation and moderated risks to financial stability, so the public didn't actually pay much attention to central banks' core mandates. But current macroeconomic developments, not just cyclical but also structural, really challenge price and financial stability. So explaining central bank independence and acting accordingly has become more difficult and also more important. Central bank independence is certainly protected by institutional safeguards. We've just heard that. And that actually includes fiscal and macroprudential policy frameworks. But I think we also need to be very accountable. We need clear communication to sustain public support to independence. So let me explain these points quickly. Obviously, as been mentioned, inflation and risks to financial stability have been low, so the public in some sense could safely delegate the task of price and financial stability to technocrats and central banks and pay relatively limited attention to the details. Now, this has changed. That's my second point. So we have, first of all, inflation, which is well above targets of central banks today, and it's one of the main concerns of the general public. I looked at the most recent Eurobarometer poll, and there 42% of the respondents, and I think that's actually on the low side, cite rising prices as the most important concern, and actually that ranks above issues like energy supply and the international situation. And I would argue that actually concern about high levels of prices and perceived inflation is going to remain even if and when inflation rates recede. So that's the first challenge. The second challenge is that during periods of low interest rates, vulnerabilities in the financial system have built up. In Germany, to give an example, we've had 2 decades of declining corporate insolvencies, very low credit risk, strong support to the real economy and indirectly also to the financial system through fiscal and monetary policy. And that, we think, leads to an underestimation of macroeconomic risk going forward, and also the expectation of further policy support. So higher vulnerabilities in the financial system is the second vulnerability. The third, we have high levels of debt, and that creates tensions between fiscal and monetary policy. And that's my third point. It's important, but also more difficult to actually explain the role of central bank independence and to act accordingly. So one tension, one conflict of interest that can arise in the short term is that there can be pressure on central banks to keep interest rates too long for longer to avoid risks to financial stability. But I think this even increases vulnerabilities in the financial system. So if we delay the necessary monetary...
Okay, volume is extremely low at the moment. I think we're waiting for the last section when Jerome Powell will speak here. So let's be patient here. Really important to be patient right now during these speeches right now. It can really go in any direction here.
Time of the crisis, central banks provided liquidity to stressed financial institutions and often to institutions with potential solvency problems. Capital buffers in the financial sector were insufficient, and fiscal funds were ultimately needed to cover losses. What are the lessons from this episode? Well, we need sufficient capital buffers in the private sector. Gaps in the institutional framework needed to be closed, so resolution frameworks have been certainly high on the agenda. And independence and credibility of central bank also may come under threat if there are insufficient fiscal backstops. Now, a lot has happened in the meantime. We have better fiscal and macroprudential frameworks, and that help us to prevent financial or fiscal or financial dominance. And these frameworks are actually complementary to the frameworks for central bank independence that we've just heard about. Obviously, there's a lot of institutional safeguards to central bank independence. In Europe, primary law assigns a strong role to central bank independence, and the legal basis in the euro system is even stronger than in Germany. So changing the treaty would require unanimity versus simple majority when it comes to changing the Bundesbank law in Germany. Maybe just as an interesting side remark, there's interesting historical research showing how independence was made into the legislation in Germany, and when independence was discussed in the 40s and 50s, there was actually stronger support for independence by the U.S. authorities than by the German authorities. Obviously, it's different when it comes to financial stability. The frameworks, the macroprudential frameworks that we have to consider that the time horizon for financial stability risks is different than for monetary policy. Financial cycles last longer than business
Consolidation,
cycles.
guys.
The policy objectives are different. It's more difficult even to quantify financial stability than this is the case for price stability. And we have different types of instruments. But still, we need also independence for financial stability policies, as we've also heard from Tobias, to avoid inaction bias and to avoid that authorities come under fiscal pressure. The last point I would like to make is also something that colleagues have mentioned. Legal frameworks are not sufficient. We have to communicate and to explain independence. And this can actually be quite a balancing act. So we have on the one hand the technical experts to which we have to explain our policy cycle, where we evaluate our policies, the intended and unintended consequence of policy choices. Speech. But these policy evaluations are rather technical and tuned to an expert audience.
Let's get to the point.
But at the same time, we need to convince the general public that the central bank acts in its best interest and protects the public good stability. So we need a translation from the language spoken by the technocrats to the language spoken by the general public, but we don't have established dictionaries for that. So one tool that the Bundesbank is using is actually a small video. It's like a comic strip explaining why financial stability is not boring. And if you get the chance, take a look at it and give us feedback. And so I think we need this dialogue with the public in particular because we live in a time of structural change and we need to understand what's going on around us. And so we need a lot of communication channels also to the general public. Thank you very much.
It's a pleasure and an honor to be here today.
There we go.
I guess I'd like to start by thanking you,
Uncle
Stefan, for your
Jerome.
friendship, for being a great colleague.
Exactly
You
before the
are
New
an
York
absolutely
Open.
essential person.
What a surprise.
You'll be badly missed. I'm going to use my comments focusing on the U.S. context, and I'll address three main points. First, the Federal Reserve's monetary policy independence is an important and broadly supported institutional arrangement that has served the American public well. Second, the Fed must continuously earn that independence by using our tools to achieve our assigned goals of maximum employment and price stability.
Maximum employment.
And by providing transparency to facilitate understanding and effective oversight by the public and their elected representatives in Congress.
Gold is up.
Third, we should stick to our knitting and not wander off to pursue perceived social benefits that are not tightly linked to our statutory goals and authorities. So starting with the first point, as Ken and others have pointed out, on the first point, the case for monetary policy independence lies in the benefits of insulating monetary policy decisions from short-term political considerations. Price stability is the bedrock of a healthy economy and provides the public with immeasurable benefits over time. But restoring price stability when inflation is high can require measures that are not popular in the short term as we raise interest rates to slow the economy. The absence of direct political control over our decisions allows us to take these necessary measures without considering short-term political factors. And I believe that the benefits of independent monetary policy in the United States and more broadly around the world are well understood and broadly accepted. However, in a well-functioning democracy, important public policy decisions should be made in almost all cases by the elected branches of government.
Okay, let's stick with the dollar right now.
Grants of independence to agencies like ours should be exceedingly rare, explicit, tightly circumscribed, and limited to those issues that clearly warrant protection from short-term political considerations. With independence comes the responsibility to provide the transparency that enables effective oversight, in our case by Congress, which in turn supports the Fed's democratic legitimacy. And at the Fed, we treat this as an active, not a passive responsibility. Over the past several decades, we've steadily broadened our efforts to provide meaningful transparency about the basis for and the consequences of the decisions that we make in service to the American people. We are tightly focused on achieving our statutory mandate and on providing useful and appropriate transparency. On the third point, it is essential that we stick to our statutory goals and authorities and that we resist the temptation to broaden our scope to address other important social issues of the day. Taking on new goals, however worthy, without a clear statutory mandate would undermine the case for our independence. In the area of bank regulation, as Tobias mentioned, the Fed has a degree of independence, as do the other federal bank regulators. Independence in this area helps ensure that the public can be confident that our supervisory decisions are not influenced by political considerations. And today, some analysts ask whether incorporating into bank supervision the perceived risks associated with climate change is appropriate, wise, and consistent with our existing mandates. Addressing climate change seems likely to require policies that would have significant distributional and other effects on companies, on industries, on regions, and on nations. Decisions about policies to directly address climate change should be made by the elected branches of government and thus reflect the public's will as expressed through elections. At the same time, in my view, the Fed does have a narrow but important responsibilities regarding climate-related financial risks. These responsibilities are tightly linked to our responsibilities for bank supervision. The public reasonably expects supervisors to require that banks understand and can appropriately manage their material risks, including the financial risks of climate change. But without explicit congressional legislation, it would be inappropriate for us to use our monetary policy or supervisory tools, for example, to promote a greener economy or to achieve other climate-based goals. We are not, and we will not be, a climate policy maker. Thank you.
Excellent. Thank you all four for this lucid remarks.
Sorry, guys. Okay, that's it.
Mervyn?
Well, I just
This
want
was
to say how strongly I agree with what Jay
absolutely
Powell
not
just
exciting
said
here. We have a Q&A
mandate.
still coming, so it's not over yet here.
From politicians.
But this is not really
is a great responsibility.
something that we have been waiting
It cannot
for.
be misused by trying to creep into areas which have not been explicitly.
Let's keep a close eye on this, on the dollar right
by
now.
the appropriate political process. And the way I think about it is,
We're not done yet.
that nobody would ever create a central bank to prevent pandemics. Nobody would ever create a central bank to combat climate change. They would create a central bank to try to ensure price stability, and they would create a central bank in order to try to maintain stability of the financial system. So I think if you're going to have central bank independence, you should always remember the maxim, which I think is crucial for any agency, which is only do what only you can do. And there are plenty of other people who can take measures to combat climate change. And I worry that people are, in the great enthusiasm for doing good, are actually putting at risk central bank independence.
Others? Ken?
Well, not necessarily to the three questions, but just expanding slightly.
Yeah, please.
I think, particularly when interest rates were hovering around zero, one of the challenges to central bank independence was the idea we don't need it for stabilization policy anymore. That's very popular among a significant group of academics. In fact, if you look at
dollar coming down,
the
though?
American Economic Association and compare what they said in 2000, where that was not considered to be a good idea by most, the considerable majority did think it was a good idea by 2021. And no one introduced Torsten, but he's made giant contributions in political economy, along with his co-author Guido Tabellini, also Lars Svensson, who's here, and the late Alberto Alesina. And this just seems to have been forgotten, that I will see, I'll pick on him, Paul Krugman, draw an IS and LLM curve, and he says, well, you could shift the IS curve, that's fiscal policy, or you could shift the LM curve. You can kind of do one or the other. Well, I mean, fiscal policy is actually the sum of tens of thousands of different policies which are hardwired politically, and the fiscal policy is absolutely necessary in many cases. And of course, when a catastrophe, a pandemic, a financial crisis hits, it's less political. But in most cases, the independence of the central bank gives it this ability to approach things more technocratically and fairly quickly, that where fiscal policy needs time to sort out the political dimensions of things.
I can't wait till this is over, guys. I want to get started.
I mean, one reflection that I have when I listen to the panel here and also looking at the questions, how central bank independence has evolved over time, I think it's certainly important that we also see it as a generational issue. So to what extent does the young generation, I think that was very interesting what you said, like in the 90s there was still the memory of higher inflation, and I also alluded to the discussion of the situation in Germany in the 50s, where actually the politicians seemed to be tempted, when you read the account of the historians, to have a little bit less independent central banks, but the public was still so much aware of the high inflation that they pushed that the public opinion pushed towards more and more independence together with the US authorities at the time. And I wonder whether today we're reaching the younger population and explain to them why central bank independence is so important. And I think that's also part of our outreach that we have to do.
Jay?
So I'll admit to not really answering the third question. But I'll take a shot at it now if I can.
Are you going to take much notice of the Wall Street inventories, MLM, in 25 minutes? Not really, no. I don't think it's really going to matter a lot, to be honest.
Problems with the mandate, unforeseen tensions between either financial stability and monetary policy and that sort of thing. And I guess I would take the position that would not be my takeaway at all. I think what happened in both crises is that central bankers used their tools pretty innovatively to deal with exceptionally unforeseen and difficult circumstances. I think the main takeaway from the global financial crisis was the need to build far more resilient core of the financial system. And we did that. The banks did that. We did that. All over the world, people did that. And I think that financial system now is now substantially more resilient and more strong at its core. I think it held up better in the pandemic as a result. The pandemic was a different thing. It was it called for a whole of government response from a medical standpoint, and it called for use of fiscal policy and monetary policy tools in unprecedented ways. There had been a concern in the United States that Dodd-Frank had too limited the Fed's authority under Section 13.3 to do facilities and lending. The new system actually worked quite well. What it did was it required the Treasury's, the elected part of the government's approval for these emergency lending facilities, and that actually worked very well. And that's actually an appropriate thing, because these are extraordinary measures We only have the authority during emergencies. And to have the elected government approving it, it was a very constructive process between us and Treasury. So I guess to take a step back, I think that the tools that we have work. I think there's nothing wrong with our mandates. I don't see anything about the laws that govern us or provide our mandates that needs to be changed, and it seems to have worked pretty well in these two very difficult circumstances.
Yeah, that's interesting. Yet there is somehow, at least to some of us, a difference in the reaction in the 90s and the reactions now. So in the 90s, the public enemy number one had been inflation, as Mervyn and Ken had discussed, and that was an outcome of decision making that wasn't useful and was subject to these credibility problems. And what we tried to do then was to construct a more robust framework in terms of institutional reform that would produce better decisions, that would keep inflation low. Now the public enemy number one, arguably over the next 25, 30 years were these repeated financial crises or risks of financial crisis. And it's true that there was, of course, much more regulation of the financial sector, but not to the same extent, trying to address by institutional measures the underlying decisions in this arena.
Tap into the zone again.
By banks, yes, but not necessarily by policymakers. So, is there a case, Mervyn? You have strong thoughts on who should be responsible for financial stability and macroprudential policies. Do the events that we went through during that dramatic era of the great financial crisis made you rethink?
The Japanese yen is still in that zone.
Issues?
Well, I think the answer is yes, because when the Bank of England was made independent in 1997, actually both the then governor, Eddie George, and myself were quite content, despite some press speculation to the contrary, that bank regulation would go to a separate body.
US dollar Japanese yen is looking interesting. If you break this high here, 132.077, getting more interested in this trade here.
It was about elimination of insider trading, fraud, etc. It wasn't about a historical bank run and about inadequate prudential regulation. And in the 5 years before the financial crisis, that's when you saw the leverage of the banking system increase very rapidly, so that it did become very fragile.
USD cut as well.
And I think after that, I was very struck that when the to-be Prime Minister David Cameron and George Osborne, the Chancellor, came to see me, their argument for putting regulation back in the Bank of England was essentially that the only institution that people will trust is the central bank. Therefore, you need to take some of this back. Now, you can argue, I think, whether some of the details of regulation needs to be inside or outside the central bank. That's a less important thing. But the principles of ensuring, as Jay said, that the banking system was sound, I think are ones that central banks have to be involved in. But deep down, it seems to me the big difference between the way policy was set in certainly the 80s and early 90s and today is this business of recognizing that the quid pro quo of central bank independence is communication, explanation, and clarity of that communication. The great American economist Bob Solow once said that an economist needs 3 qualities: faith, hope, and clarity. And the greatest of these is clarity.
Excellent.
Torsten, can I just say something in response to your comment? I mean, inflation's back. So yes, if you'd asked that question in 2021, maybe, people said, well, financial crises.
Let's see if we can break this high here.
You need that
would be fantastic.
A framework that
US dollar Japanese yen
saying is stable over the full cycle of things that are happening and doesn't get, it gets tuned. But and also, let's look at the rest of the world, please. I think if we're looking at developing economies, emerging markets, which are also struggling to find frameworks that I wouldn't tell the IMF to change what it's doing in terms of central bank independence.
All right. So maybe we'll go to the
Usually God's coming back
when
here.
the public is involved, the Q&A session. So if you want to say something, please raise your hand. If you want to pose a question, if you do get the mic, please start by saying your name. Please be succinct.
Dollar.
And please try to
Making
relate
moves
to
here.
the overall theme of the, of the panel. Okay, Richard Portes, please.
Yeah, we're coming through. Richard Portes, London Business School and European Systemic Risk Board.
There we
where
go,
I
dollar
learned
making moves.
Over several years, a great deal from Stefan English. No more of that now, but maybe later. I'm not totally convinced that we now have a resilient system. Mark Carney said that in 2017 as his final statement from the Financial Stability Board. But then the banks, yes. But we found in early 2020 that that wasn't true of the non-banks, in particular the money market funds, and the central banks had to step in. Central banks don't like to do that, quite rightly. They don't like to have to act as market makers of last resort. And that may be a compromise of the mandate. So the questions that I would put to the panel, I mean, as we've seen, we've seen very recently, the rise in nominal rates is exposing financial fragilities in the system. They came from the search for yield, whatever you want to call it. And we saw an extreme example of that in the United Kingdom in September of this past year. Now, in those circumstances, should financial stability be explicitly in the mandate? Should we be recognizing reality, what central banks actually do in practice? Would that help avoid financial dominance if it were in the mandate? Given the huge costs of financial crises, is financial
dollar, let's
dominance
break this level. Looking better.
Recognize reality.
That's what I mean with the
and
reversal here.
Put financial stability in the mandate.
Couple more minutes.
Who wants to take a stab on that?
I mean, in a sense, it is in the mandate, most central banks now. And I think it needs to be linked explicitly to the instruments of central banks. This was the problem before. And the obvious instrument is, whether you call it lender of last resort to banks or the equivalent to the non-bank sector. And I think that the central banking community is very focused on the question of defining the circumstances and the nature of institutions that happen to be non-banks that would merit an intervention. And I think that the only way to handle this is to have a framework which is set out ex ante, which actually tries to identify clearly the circumstances and the institutions that would merit lending from the central bank, but also ensures that the scale of that intervention is also under the control of the central bank and not something which the actors themselves in the financial system can expand to almost any number simply by the actions that they take. It's ensuring that there is enough collateral against which to lend by the central bank. Now, I think the central banking community is well aware of these problems. It doesn't make them easy. It doesn't mean that you can do it in a week. But my guess is, yes, you're right, Richard, that there will be an expansion of the mandate and that it's there in principle, but it needs to be made much more concrete by saying, what are the institutions, what are the circumstances, whether it's maturity mismatch or something else, that would justify an intervention, and to have sufficient regulation on that degree of maturity mismatch ex ante to limit the size of the intervention.
Claudia?
Yeah, no, I agree that to some extent the framework for central banks to be involved in macroprudential policy is well defined. So the Bundesbank, according to the German financial stability law, has a clear mandate in that regard. It's a joint mandate with the supervisory authority and with the Ministry of Finance, because as we all know, there's a lot of distributional implications that macroprudential policy decisions can have. So it's not us alone, and I think also the ECB has clarified in its strategy review
All right, there we go.
monetary policy and financial stability interact. The one point that I would like to make in addition is that we also do have...
Okay, dollar is reversing right now. Yes, we came down first. Right now we're making moves again. So it is starting to look better. USD cut coming back up as well. Gold will probably come back down right now as well. Let's go to gold real quick and then we continue with the speech here. Or the Q&A. Whatever it is. I expected a little bit of different approach here, but okay. Okay, overall, I do like what I see here. I do like what I see here for gold right now. Okay, let's go back.
Just revealed those weaknesses in the big banks and the large utilities, financial market utilities, and so there has been, as Claudio was saying, and Mervyn was saying, there's a lot of effort going into and has been in what do you do about money market funds? What do you do about the treasury market? These things are much, and I think the first order answers need to be changes to the structure of these institutions to make them stronger, more resilient on their own. I would say expanding the provision of central bank liquidity is not the desired response. It really is to strengthen these institutions. Our capital markets are quite vibrant and very different in what they do from what the banks do, and I wouldn't want to see the kind of prudential regulation that goes along with liquidity provision. I don't think it wouldn't be great to extend that too much into the non-bank financial sector. I'd rather work on structural reforms, which is kind of what we've been doing.
Klaus Eklund.
Thank you, Torsten. You mentioned that you did graduate studies together with Stefan. I can add that I actually made undergraduate studies together with Stefan, so I'm even older. But a question of independence. It seems that you have mainly been discussing central bank independence from, let's call it political pressure. And of course, partisan pressure would be even worse. But there's something more subtle about the independence issue, which I think we can discuss in Sweden right now. I'm personally interested in that. I worked in the finance ministry many years ago, but I was also on the general board of the Riksbank, Riksbanksfullmäktige, not the board of directors, but the general board before, in the old evil days before independence. Anyway, in Sweden we have 4 institutions: the Riksbank, the Financial Supervisory Authority, the Debt Office, and of course the Minister of Finance. And they often work with similar issues, obviously. And they often have to cooperate.
Dollar is going up.
So the question here is, how independent can the central bank
be? I think 10 more minutes, guys.
Reality?
10 more minutes.
To what extent must the central bank discuss, compromise, lean against the wind or with the wind, and be politically agile at the same time as it is formally independent? Maybe it sounds like a stupid question, but I think actually this is almost as important as the, let's call it the big issue.
Making moves, guys. You were right. You guys were right so far.
I'd like to hear sort of your experiences from this. How independent can the central bank really be?
Can I start by saying, I think we have to distinguish between monetary policy independence, where the case, I think, is very strong, from all the other activities of the central bank. So as a regulator, the United States, Fed's very powerful, but there are many other regulators it deals with. And I think the same's true in most countries. So that it's very different conceptually, and I think all regulators, we'd like to be independent from over political
gold is, I have my eyes on gold,
being
guys.
Bought off, or, even if it's only psychically held hostage by those that it regulates. But I think that's, the central bank in general, and looking at all its functions, it clearly has to coordinate with other agencies. It clearly has to be subordinate to political policy, as we had in the first session here.
So I can speak from my experience, which was that between 1997, when the Bank of England was made independent, and 2013, when I left, there wasn't a single episode where the elected politicians put pressure on the bank to adopt one interest rate policy or change rather than any other. Whereas...
Okay, real quick. Gold, there's a lot of liquidity taken out already. They have been pushing gold hard here to take out these highs here. It's no surprise actually here. We took out the London high. There was also a lot of liquidity above this particular range here, built up. So this is taken. After that, we created a 1 minute shock to the downside, quite aggressively here. Left us with an area of supply. This could be becoming interesting right now. Dollar is getting stronger.
Had to be approved by the Treasury. That seems to me perfectly reasonable and appropriate. And you have
US dollar Japanese yen broken. This is what I was looking for.
Why you want to do it. And in very few cases could I imagine that the Treasury would say, if the central bank feels that a lender of last resort operation is appropriate to prevent some collapse, the idea that the Treasury is going to say you can't do it, I think is not likely to be true. But since taxpayers' money is at risk, it's perfectly reasonable for the Treasury to have an input on it.
Gonna wait for closure above that line here.
These two different approaches in the different areas of policy. So I think the important thing is for it to be quite clear what that policy responsibility is, whether it's in the US with changes in legislation or
liquidity built up here
agreed between the bank and the Treasury in the UK. It's quite clear what the lines of responsibility are and who has to be consulted. That's the important thing. That's what prevents, I think, things going very wrong. It's where it's where different institutions or players all feel that they are the people responsible for a particular policy that you get difficulties.
Yeah, well, to express it differently and perhaps more simply, it's a big difference between taking the decision in deliberation with others or taking it after deliberation with others.
Yeah.
And that's the responsibility point, right? Yes, please.
Thank you very much for the panel. Joachim Nagel for the Bundesbank. Let me put it like this. I think it was already said by Ken Rockoff. I think inflation is back now. We are more or less, in my interpretation, still in the midst of a storm, and the storm is not over. So we have to do our job, our main mandate.
There we go.
This is our role.
Let's go.
During the last 10, 12 years, we were the most welcome partners of the politicians because we, in our independent role, we did everything to fight against all the financial crisis and did what we did. But this came with a price.
Yes.
And now in the next years, the politicians have to learn that monetary policy is coming with a price.
Yes.
So maybe some of us, they have to announce that there are maybe losses or not the profits we came up in the past. What is your opinion about that? Is that influencing the way we are being perceived in the future about our independency?
Who wants to take that on?
Well, I'll take it on. It's related to something that I said, which is that the pressures from politicians will be greater and more complex today than they were in the 1990s. And you're absolutely right. But I don't think it's an issue about the mandate of the central bank. That is unchanged. It's that some people in positions of political responsibility will learn that life can be difficult. But I don't really see that there is a great wish anywhere to change the formal independence of central banks. But politicians will always want other people to do things that would benefit their own short-run interests. That's where central banks will remain solid and maintain their independence in respect of monetary policy. And they have every incentive to do so, in my view.
I mean, yes, but you can manipulate this as well.
Someone else? No?
Well, I'll add briefly. I mean, clearly, there are many cases where, given the central bank's independence, politicians will look to the central bank, as Mervyn's saying, to do something they should do, but they don't want to do, or political interests will say want something to do with inequality or something to do with the environment that they're not getting through the political system, and they'll view the central bank perhaps as an end around being able to implement it. But of course, at the end of the day, the central bank can't take
still have to wait for the speech, guys,
consistently and maintain its independence.
We have to wait for it to be finished.
They're deep crises where the central bank
should be 5 minutes. 5 minutes should be over.
But I think in that case, it again is looking to the political system to back it up. If you go to developing economies, the normal rhythm of things is the central bank moves, but then the Treasury kind of takes over everything it did, and everybody knows that that's coming, and so it works that way because the central bank can move so quickly. But it needs to be very wary of taking political decisions.
Stefan.
Outside the topic of the panel, but since Ken, you are on the panel, I'll ask you anyway. You wrote a nice little book called The Curse of Cash, and in this environment, cash is disappearing. So, what's your advice?
Well, isn't it wonderful that the people who organized this event had a panel just before us about this? But no, I think one of the things that's been very naive about I will call them crypto evangelists, is that they can somehow do something better and have an end around. And in fact, if you look at the history of money, which is probably what I should have called my book, and you look at the private sector always invents everything, but for many reasons, the governments eventually regulate it and even sometimes appropriate it. And I think, that's what we're seeing going forward in the digital space. You need rules of the road. And I was going to bring it up earlier, but I have to mention FTX. That was kind of a success for the regulatory community. It didn't do anything. It's the $32 billion at the heart of the crypto system just had no effect. And I think it shows how you need some regulatory structure to provide guardrails, and the central banks need to do that. But anyway, I've learned from you over the years on this issue, so thank you for asking that question.
Since we're spiraling out of control here with questions about anything, we should.
This is just you can better.
So all good things must come to an end, and I'm not gonna.
They can arrange a beautiful conference here and have fantastic conversations with each other, but where is it leading to? What? Where's the climax, right? Let's see if we can find something.
Summarize for the audience, which is the most important thing that we should take away from the panel. If you had to expound on one, which would that be? Who wants to take that first? Jay?
So I'll just conclude by saying that for us, central bank independence is a matter of statute. It's not in our Constitution. It's just an institutional arrangement that has served the public well, nothing more, nothing less. And as long as it does serve the public well over time, then I think it's safe, and I think it's safe now. But that means we've got to be committed to achieving our goals and to sticking to this precious grant of independence. To keep it, we need to deserve it, and that means stick to that work and don't look for broader things. Where it was discussed at the first panel, really, we shouldn't be getting ahead of where the public is if there's no specific mandate. And in the case of the U.S., that's a particularly salient point today.
US dollar, Japanese yen is still on my radar here.
Yeah, indeed. Our bottom line.
I fully agree with what Jay just said, and that's
Japanese
also
yen.
when you look at the German history. So sticking to the mandate and deliver. This is what's building trust. And I think when it comes to financial stability, we're actually at a critical juncture
because
the system
sitting here
has
as
not
well.
been fully tested. So we have to make sure that we also deliver on both of our mandates, price and financial stability.
Marvin?
Japanese yen basket.
Do not have to come to
bullish for the US dollar against Japanese yen.
Central bank independence is one of them. And I think the point that comes out of all this is
dollar is more bullish than the Japanese yen right now. Japanese yen tends to come down.
By how much, or go down a bit.
So if the Japanese yen gets rejected here, we break these levels here, you will see a significant increase. Even if the dollar would stagnate of the US dollar against the Japanese yen, we have that gap here. You can trade it on the lower time frame here. Wait for a 1 minute closure, at least above that level. These are all wicks here.
It's hard to know forever. And I would just again argue, as I said in my remarks, that it's really been maybe the most successful policy innovation post-World War II and continues to be.
Okay, let's stop at that and take early coffee. Thank you.
Yeah, drink some coffee, please.
Thank you.
Okay. Great. I have one announcement to make. It's time for coffee.
It's time for coffee. Yeah, all right. Here we go. Go drink your coffee. Let me put on some music. What about that, guys? Really? Where is your song? Where is your song? I lost your song here. I need to release the tension, guys. Release the tension. Come with a fresh mind. Grab that energy, that prana. Absorb some positive energy here. Let's forget about this whole hour. And let's look at the charts. Okay. What we're gonna do, we're gonna look at the potential. Still look at the US dollar against the Japanese yen here. We have been consolidating now for a while here, of course. However, there's one thing I like here, and let's look at the Japanese yen basket. I want to see this low getting taken out right now. We have equal low sitting there. I like that. Liquidity has been taken a lot here already. Hopefully, we can just come back down here. Will be very good and beneficial for the US dollar against the Japanese yen. Gold. Oh, we went into this particular zone. We went in this level here. This is taken out right now. Overall, this speech was really nothing special, to be honest, guys. However, we always need to check it. We cannot avoid it. Is this what it is? We really need to see what exactly will happen here in regards to. Maybe he says something extraordinary. You never know. January 10th, New Year. You never know what happens. So you always have to watch the news, regardless, okay? Nothing special here. So let's look at the data. So, dollar came down, took out this low, reversed right now. That's interesting. Created a significant high, came back down. Are we going to break this high, yes or no? That's the question. 103.284. Gold. Dollar, very similar. You guys know, look at that. Looking very similar if you invert the scale. Pretty much the opposite of what we're seeing for the dollar index. So, that's what we're seeing here. I'm looking at the US dollar Japanese yen. I like it. I'm interested in it. I want to see something breaking. And holding. It's like closing at least above that particular line. 132.078. Based on that, potentially we can finally start looking for this particular setup here. I do like it. I do overall. I like what I see here. Let's go to the 5 minute. Want to fill up that gap here. Looking for a long, waiting for a closure. Stop loss underneath that zone. Going for like a 1-to-1 ratio here. Tapping into this area. The smaller, the better it's going to be. Coming into this particular range. Wait for the dollar here. Wait for the dollar. Wait for the Japanese yen. Japanese yen getting rejected here. This is a good sign. I like that. It went up, closed, came down straight away. Thank you guys for today's session, by the way. For all the people in our V2, in our community, by the way. Was absolutely a fantastic live stream. We had a live stream as well during the London session. Absolutely amazing. Great that you guys were here. See you guys tomorrow as well at the London Open. Okay. At least you made some profit today. We're still gonna look right now. This is starting to look exactly what I wanted here. Two minutes, 45 seconds to go. If you close above it, looking to enter it here. Looking to enter the US dollar against Japanese yen here. We have this equal low sitting here for the Japanese yen basket right there. Coming into that zone. Targeting these particular lows will be fantastic. Dollar needs to break this high, also important. Dollar is still the dominating pair. We have to take that into consideration. If you guys want to join our Discord, you can join for free. Links in the description. I'm sharing my weekly analysis every single week. I have not missed a single week here where I share my analysis for the whole week. Setups you might find interesting. We have the Demented charts. We have, of course, the setups where you can share all your charts as well, where everyone is sharing their charts. If you're looking for good trading ideas, this is definitely the place to be. We also posted a new video. We're going to upgrade our YouTube channel tremendously. Every Monday, we're going to drop a fantastic video for you guys. We have a video on our channel right now. It's kind of an introduction, a motivating video. Could be a motivating video for you as well. You can find it here. Go it, watch the video. Let me know what you guys think. Place a comment. We worked very hard on it. We have a team right now working on some amazing content for you guys, okay? So we're working on some really, really beautiful stuff here. This year is going to be full of trades. We're going to make sure that we make these trades here. The last 3 months we did 140 trades together. We had 84 wins, 32 losses and 23 break even. Pretty good record so far. Just going to keep building here. Okay. Again, wick, no closure. A lot of consolidation, guys, today. Let me go over a few more here. One of them was gold. If you do break this right now, then I'm also more interested. Why? Because we tapped into that zone twice, came back down already, came back down second time. We broke the structure. Then you can put your stop loss here, or your stop loss above that high. Take profit underneath that zone here. Nakuta says, just subscribe because of your amazing analysis. Hope to see more soon. Thank you so much. Overall, yes. Well, I want to make sure that we always have a trade live. This is what I want to see. I want to be that guy on YouTube for you guys that is showing proof constantly. Proof. We have this done in the last couple of months already. Last 5 months. This is how we started. We started only live trading. Right now we're going to add on a bunch of other content as well. But yes, we stick to our roots. And that is trading. The essence of what we're doing here together. Trading itself, okay? Let's have a look at the eurjpy as well. Okay, we tapped to that zone. Wow, beautiful. We took out all the liquidity here. We tapped into the zone, immediately came down. This is fantastic. But it's going up and down, up and down, up and down. Look at the consolidation, guys. Look at the consolidation here. Look at all of what we're seeing here. Very important as well that we wait for a closure of a particular candle here, of a particular move. Japanese yen is showing weakness. So it's not the Japanese yen here that is showing the problem here. Japanese yen is in our favor. It's the dollar index. Okay, it's a dollar right now. We came up, we came down, we came up, we came down, we came up, we came down. Welcome to Jerome Powell. This is most of the time what happens during the FOMC meeting. FOMC meeting is of course way more aggressive, way more volume. However, you see all of the time that nobody really knows what's going on because their conversations, they don't make any sense. There is no logic in it. It's just an academic trying to say something, but, you know, media training, right? How do you say something without actually saying something? Because they know everything they say can be used against them. So they're playing the safe route, right? That's what they're doing. So whenever you have speeches like this, it's very hard to determine, oh yeah, this direction, that direction, right? It's very simple. If the CPI is lower than expected, right? Then people tend to go risk on, right? Tend to go into equities, commodity, invest into stocks, and so on and so on. So it's very vague, and you have to take that in consideration when trading. Regardless, we always try to see what we can do. But it's a good lesson as well. Okay. Gold broke the highs. Still, a lot of people are trapped. This is why I'm super patient right now, purposefully. Unless we got a very good confirmation. Only thing that I'm interested in is the US dollar against the Japanese yen, because it's very simple. We can define for sure that the Japanese yen is very weak from a fundamental standpoint, from a technical standpoint as well. So if the dollar is then showing some strength, then it gives me a very clean indication that the US dollar against the Japanese yen could be a beautiful setup here. I'm gonna literally go on the 1 minute chart right now. I'm gonna look at the liquidity weird. Where is liquidity built on some particular charts here? Is that something that we can leverage, yes or no? Okay, Euro Swiss franc showing significant weakness here. Super strong reaction so far. Lorena says, great to see you still going super strong. Amazing analysis, patience as ever. Missed trading with you. Great to see you again. How are you doing? Hope you're doing well. How is the Philippines? Fantastic. Dollar strength, it's not ready to go up yet, but we will watch and wait, correct. Akin Science says, well done, bro. Please look into the DAX. German 30, yes. We can do that. We can do that. Oh, German 30. I'll look at the 40. Okay. You want a full analysis here? Let's zoom out a little bit more. Overall bullish, continuation to the upside. We have been coming down here. Go to the daily. We have been breaking. We have been coming up significantly. We have broken a very important high. Very, very important high here. We came back down to retrace this level. We tapped into the zone here. Overall, still very bullish. We still have a long way to go. We can take it from all the way from here. If you draw the Fibonacci from swing low to swing high here, in this particular range, you can see clearly that we are coming into a very important zone, which is this level. That one right there. So be patient, be very careful, very aware. You're going to face a lot of resistance right now, but we're not there yet. We are not there yet. Okay, we're coming very close though. Look at the 15,000 psychological level as well. So it makes sense. It's aligning with the technicals as well. So if you look at this zone, all good. So far, super bullish and so on and so on. However, if you want to go long right now, it's a little bit, we're a little bit on the late side here. And the reason why is because we already came back up from the weekly swing high to swing low. We are already in a premium zone right now. So this is the moment when it could say, okay, potentially we're going to look for a bigger pullback in the very short term. Keep in mind this is on the weekly. Then on the daily, this will be the confirmation you're looking for. If you don't take that on the lower time frames, right now you are almost there. So I would slowly start to look for weakness. Start to look for weakness in the charts here. And you want to see structures getting broken. So if you go on a lower time frame right now, nothing spectacular yet. We have created a higher high. We have been coming down, consolidating, mitigating into the zone here. Also, again, very, very similar. This particular level. If you take this swing low to swing high, well, guess what it is? The 70.5, 79%. Exactly the same zone as we're seeing on the weekly. Right? The other way around, but on the weekly time frame. So we tapped into that zone. Beautiful. This would have been a nice... Fibonacci is still very, very powerful. Very useful as well. 6 to 1 so far. However, keep in mind... Yeah, you can potentially start looking on the lower time frame. If you are interested here, you can start looking still at these particular levels here. This is the last swing low to swing high. On the lower time frame, you have this area of consolidation. This is the whole profile here. This particular zone, so we can take it towards this range. It's very similar. If you want to look for a long on the lower time frame, wait for the confirmation on the 1 minute. Take it down here. Look for the continuation. Dollar needs to come down. If you want to see this happen for sure for the next leg up here, but overall. Something like this. 14,737 on the 5-minute chart. Have a look at that one. Target then this high. 14,800. US dollar Japanese yen is coming up, is making moves here. Okay. Dollar coming up again. What a surprise. What a surprise, okay? Japanese yen is weak. Japanese yen is weak. What is a good indication for the Japanese yen? The lows here. Particular equal lows here. So if we target these equal lows here for the Japanese yen, and the dollar breaks a high, potentially here, then it's definitely worth a long of US dollar Japanese yen. Nooking, Genook. Wow, didn't know you live in Indo. How's Nasi Goreng treating you? Bike. Do you love Ini Bali? Saya suka Bali. Empat tahun. Lorenzo, check SMC concept. I think this trade is a bit better. I will check your chart, my man. EURUSD. Yeah, be aware. Just wait for the dollar to break this particular high. If you then look at the EURUSD here, we saw that reaction right now, which is great. One retracement up, one more down. That's our trade. In the meantime, waiting patiently for the US dollar Japanese yen. Arnold tot Kamu suka Anjing. Yeah, I love dogs. I love dogs, my man. I'm definitely more a dog person, yes. Shout out to each and every one of you guys as well. Thank you for the support since we started 6 months ago. This year is going to be a big year for us. If we're going to do this on a consistent basis, I can guarantee you we're going to make some money. We're going to become better traders. We're going to be more patient whenever we need. And we're going to learn and live. So if you want to be part of our community, we have over 5,000 members already in our community right now. 5,500. Then this is the moment. You can join us for free. And we have also daily events here. You can join one of our daily events. Tomorrow is one. And today is one. After the stream, we have a daily event for you guys as well. Given by one of our mentors here. Completely for free. So it's going to be very nice. Mushi says many homeless and stray dogs in Bali if you want to adopt. I realized one thing about Bali and about dogs in Bali. Bali dogs. I realized one thing very important. Okay, what is better? Alright? Dogs. Living on the street. Okay? Having to go and hunt for food. Alright? There's a lot of food in Bali. There's a lot of food everywhere in Bali. Keep that in mind. Hunt for food. They run in packs. So they have their packs, right? They have their own clique, their own group, their own gang, right? And they're hunting. Or European dogs or American dogs, all right? Sitting at home all day. Maybe they can pee 2 or 3 times a day outside for 10 minutes. What is better? A lot of people say, like a lot of tourists that come to Bali and they say, oh, so poor, all of these street dogs, it's like so sad. These dogs live the best life ever. They have an amazing life. Most of them. Yes, but they can give you rabies. Yeah, okay, that's true. You should be careful with that. Fair point, fair point. Okay, liquidity is definitely built right now for the euro against the US dollar here. If we come back down, we're potentially going to look for this trade here. US dollar Japanese yen is still open. We're still patiently waiting here. Mushi says they aren't living their best life. No, trust me, bro. I live here for 4 years. Overall, these dogs, they're getting treated. Okay, there's always an exemption, right? Hello Lorenzo, is the cost of living in Bali affordable in comparison to your country? Any tax benefits? Yes, for sure, tax benefits, 100%. Is it cheaper than in Bali? The problem with Bali is you can make it as expensive as you want and as cheap as you want. So if you want to live cheap, you can. You can definitely live cheaper than where I come from originally in the Netherlands. Way cheaper, for sure. But you can also make it very expensive. So yeah, it depends. Lorenzo, I suppose you are Italian? My father is Italian, but my mother is Dutch. I'm a mixed breed. Okay, US dollar Japanese yen is making moves, guys. This looks promising right now. Yeah, I'm gonna stick with this fair value gap. I'm gonna stick with the US dollar Japanese yen. I like what I see here. Okay, there we go. Wait for the close, guys. Not a single candle has closed above that level. Patrick Cook said, there is a guy that got me into trading that lives in Bali too. Have you heard of Cameron Foos? Yes, I know him. We have seen each other, I think, 1 or 2 times. We're not like friends or something. However, I respect him. I respect his work. And his experience. Okay, that was the confirmation I was looking for here. I like it. Dollar broke the highs here. Let's see how we react on the 1 minute. This is normal right now. We're consolidating. Okay, that's what I'm gonna focus on here. How long will you be streaming today? It totally depends, man. We're gonna look for a trade right now. Just want to see some action right now. We want to make some moves here. Yes. We took our trade here. Yeah, we took our trade. Actually, a little bit. We came down a little bit more. It was 30 to 1. There we go. Okay, there we go. Finally, guys, some action here. Let's go to the 132.221. That would be fantastic. Somewhere around that range here. There we go. Who says that patience didn't win, right? Patience always works, right? Stop loss gonna go and break even. I'm gonna take 50% profit. I'm gonna go for the small profits today, but I'm gonna take it. I'm happy with it. There we go. Stop loss and break even. Let's run it out. We can go to this one first, see how this reacts here. Japanese yen. Dollar making moves here. Are we coming close towards this zone? This is gonna be some. This is gonna be a reaction here. Stop losses and break even already. I really entered exactly at the bottom of this wick here. You know, stop loss to break even, profits taken. Like, profits are profits, guys. I'm patient. I go for the small profits. If I make profits, boom. If it keeps going, I make more, right? That remaining position can turn into a full position. It can also hit me on break even for a remaining position. Overall, if I make profits every single day with you guys, we're gonna make bank. We're gonna make bank along the way. We're gonna make bank. We're gonna learn. And we're gonna experience. We learn and earn. Okay? That's what we're trying to do. On the live streams especially here. That's why we have the London live streams as well in the Discord. It's private. If you want to join, you can find more information there as well. We give at least 3 private live streams a week. A little bit different approach. Johnny says thanks, took it. Chen Zhen says win. Where's the long-term TP for dollar index? I would say, first of all, look for a pullback here. Coming back up again. Like, I think we should come for a pullback here slightly for the dollar index. I do believe that definitely realistic here. We came down extremely aggressive. I want to see it at least coming back down towards the equilibrium. So that's pretty much the 104 range. So the 104.2, 104.3. The equilibrium is definitely something I'm looking for right now. The long term, I would say that it totally depends. It's very hard to say right now what it's going to do. So many things related to this one. You know, the CPI, the interest rate decision, the sentiment of the market. There are many variables. By the way, guys, I'm going to do a giveaway tomorrow. Only thing that you have to do for that is follow my Twitter. If you then come back to my live stream tomorrow, I'm going to announce one winner. Okay? What you need to do, you can like my video or like my post here. Follow me first on Twitter. Like my post. I made a video about it. And I'm going to give away 1 magic keys to a winner tomorrow on tomorrow's stream. Also in the description as well. Okay, let's see what the potential is right now. Dollar is showing... Okay, we have this particular zone right here. On the 1 minute. Candles are everything, guys. Candles are absolutely everything. The reason why I always trade supply and demand, I still use support and resistance. So I'm not just a traditional supply and demand SMC trader. I use support and resistance. I use stop orders. I do not always enter from an area of demand or supply. So I am not a traditional SMC trader. However, I still use this as my main foundation because it works. It's so accurate sometimes with order blocks, you know, candles stepping into particular zones. Super, super valuable, super important. Japanese yen is definitely not showing the strength here. EURUSD was coming down. I sure a long time didn't come to your stream. Perhaps you can remember me. Yes, you're Elon Musk, right? You're Elon. How much do you risk per scalp trade? Usually 1%. A little bit less sometimes. Sometimes 0.5. Sometimes 1%. Sometimes more. It depends. But let's say the average is 1%. Australian dollar, Swiss franc next. Let's see. We're almost there. This is actually this was our target, our final target actually, 132.2. But it's looking very, very good. We reached our target right now. Yes, and the dollar is right now in an area of supply. So I'm gonna... Japanese yen is showing more weakness. We still have this zone here. This is why I'm still maybe keep a small position open. Look at that. Wow. Wow, it broke straight away. Okay. I'm gonna close the majority of my position here. I'm gonna close it all. I'm gonna close my position, $200. I'm happy. We are winning. Yes, it took some time. My apologies. That live stream, or sorry, that live stream, that conference almost got me there. I almost fell asleep, so yes. But we have to watch the news. We cannot trade it. Maybe something crazy happens, you never know. So yes. That was our trade here. US dollar Japanese yen made the most sense here. due to the Japanese yen, mainly. Potentially looking for re-entry, yes, potentially, depending on the dollar. We're gonna face some resistance right now shortly. We could have taken it a little bit longer, but I made my money. I'm happy. $200. I'm completely content with that here at this particular moment right now. Let's see how we develop here. No. This is, we have this zone as well. Dia of restoration says I went 100 lots and made 6,800. You didn't call the trade, you said it, you entered after it went up. No, I called the trade. I've been talking about it for a very long time, bro. Okay, next, that was one. We have it. We got what we wanted here. Let's go, maybe find another one here. How long are we streaming already? Okay. Yes, we can find another trade here. Wow, look at that. Okay, wow. Could have stayed longer, but it's all good. It's all fine. We're gonna look for the next trade right now, guys. Give me 1 second here. Dia of restorations, I literally went all in on this trade. If it didn't go up, you would have liquidated. Wow. Be careful, my man. Be careful. Always use proper risk management. Or you can just go to the roulette table. It's more fun. Euro Australian dollar is interesting to me. A lot of you guys are talking about GU as well. Yeah, GU melting, yes. People definitely got led into the wrong direction here. That's for sure, yeah. It tapped into this particular zone. I like this. This is really good. Let's go to lower time frame. We're building liquidity in the upside. Still. We're still building liquidity in the upside here. Where did we exit our position, by the way? We exited our position at $294. Pretty much here. This is where we exited our position here. Look at that. Actually, perfect exit so far. Okay. EURUSD. I mean, USD, Japanese yen, lost it TP. I'm out already, bro. I exited here. We're gonna look for a new trade right now. Okay. Thanks, take profit, congrats. Let me know in the chat, who made money on the US dollar Japanese yen? Who made some money? Money is money, doesn't have to be much. Profit is profit. Patrick says me. Holly says me. Christopher says yes. Aninda says me. Anwar. Wow, 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 man. Wow. Okay. If you can help me by liking this channel right now or liking this video, you would help me out tremendously as well. Fair deal, right? Winning trade. Like. It really works. It really works. The algorithm. Let's have a look here. Ah, gold. Gold. What's happening in gold here? Novit says, imagine I watch you today since London session, but I don't realize when you take the trade. I always ask people, like, who's in profit? Who made money here? So a lot of people do. So, I don't know. Bertrand says, UJ just paid the rent. Congrats. Wow. Okay, Bitcoin also tapped into the zone here. I'm actually very curious. Who's trading Bitcoin? I don't know. Many of you guys don't. I don't think many of you guys really trade Bitcoin. But look at that. Look at that beautiful reaction. If you ask me the question, does supply and demand works for crypto? Yes. Absolutely. Very well. It works very, very well. There's a lot of liquidity built up underneath the zone right now. We tapped into that area here. We see a fantastic reaction so far. Dollar is getting stronger. Not good for Bitcoin as well. So for the people that trade Bitcoin, could be an interesting move here. Okay. I'm gonna put an alert here actually. I'm gonna put an alert and then continue back to Forex here. Ah, this zone right here. Okay, we tapped into that zone. Yes, we did. Okay, this is interesting. We tapped into this swing high to swing low here. Japanese yen is very weak, but the British pound is not looking great either. No, we have that mess. We have that gap underneath. Yeah, if you guys want to look for something, then I think shorting against the British pound right now makes a lot of sense here. Japanese yen, moi. However, shorting against the British pound, yes. GJ, I'm not sure about GJ, but overall, if you look at, for example, GU right now. I definitely see more downside potential right now for GU here. So in regards of his setup, an actual trade setups here. Yeah, it just wants to come down now. It just wants to tap into it. It just came down. It tapped into that zone here. We have more imbalance underneath. If we close this candle like this, relatively bearish here. Let me set this up real quick and then we go back to... Here we go. Yeah, definitely looking very weak, guys. Very, very weak here. More imbalance there. Let me see if that potentially can tap into that area. Would not be surprised if so. Yeah, GU is coming down right now. GU is coming down right now here. Japanese yen has a short retracement, that's why. Definitely the weaker here, the weaker pair here. USD cut is coming up as well. We have been talking about the USD cut all day. We took some profits already, but overall it's coming back up again. Eventually things went still in our way today. Also during the London session. Overall, very good day. However, I like to avoid these speeches next time. That will make my day a little bit better. Shenzhen says The XY is about to close the fair value gap and taps into that 50-minute zone, then potentially retracement. Okay. Where's that 50-minute gap here? Yeah, you're right. There was indeed a target here. This particular zone. So that's why we're going to see a little bit of retracement right now. Small pullback here to the upside. So we didn't enter yet. Why? Yeah, because of that particular reason. We want to wait a little bit. No FOMO. That doesn't exist here. Not on this channel. I'm looking again here when I'm interested potentially in the zone here. Bitcoin in that zone, really, already. Yeah, coming close, coming very close here. I will get an alert indeed. Okay, I'm gonna look at GU right now. I'm gonna be patient here with GU a little bit. Bradley says nice on dollar yen exit wise. Yeah, let's see where we at. Where are we right now? Yes, exactly. Beautiful entry here. Entry here. Exit here. That's a fantastic reaction, absolutely. It's just worth the patience here. In this case, absolutely worth the patience. Sufi Khan says, hello my bro, not been here on for a while due to the work. It's good to be back. Welcome back, my friend. Welcome back. Hope you're doing well. Great to have you here. I'm full of energy. I'm excited to have you guys all here. I'm gonna crush this year with you guys, for you guys. Not just live stream wise, but we're also gonna release a lot of amazing content on our YouTube channel. Also in our Discord. Truly becoming an amazing community right now. We have 5,555 people coming together here. We have an event as well. You can join a free event. We talk about psychology here, something very important. So a very important topic. We have particular events given by particular coaches as well. That can help us and deliver us fantastic information. Work on your mindset, psychology and stuff. You know what the problem is with trading? Let me tell this real quick, because it's super important. We are looking for this trade, by the way, just so you know. We're looking for this trade setup. So what's super important here is to understand right now that, imagine, right? If everyone that wants to trade, what are they looking for? They want to look for right strategy. They want to make sure that they're trading a strategy. So they're looking for strategies, right? If you look on YouTube and a Forex trader, 90% it's always, which is the best Forex strategy? What is the best, setup? What is the best strategy? What is the best whatever, right? It's always strategy related. How is it possible then that if everyone knows everything about the strategy, yet 95% is still losing? How is that possible? Psychology. We're gonna give an event here very shortly. It's in 2 hours from now. You can join for free, you can join our Discord, and then you go to the event section in the corner and you click on I'm interested. Right there. And once it starts, you can join and you can get into the voice chat. Qualifies it. Did you catch any scalps on London today? Yes, we did. We did with the team. We catched some beautiful setups here with the team. Yeah, around 60 people. We have a private live stream as well. This is actually where we made the most profits today. Due to the, there was no news, there was no session, there was no particular, or was not really a particular reaction. You know, Jerome Powell here. Just so you know. Let's see where our trade was here. Okay, GU is in that zone. Be patient here. Let's look at the dollar index. Do not trade anything. Bitcoin also, by the way. Maybe gonna trade this as well. We look at the dollar. Okay, dollar is coming down right now after. Okay, this is significant downward momentum. Okay, we're gonna wait for G right now. We're not gonna enter right now. We tapped to the zone. We created a higher high, came back down, created lower low, taken out the liquidity underneath. Still more liquidity built up here. However, we tap almost in the zone, so we have to wait here. Maybe the reaction will be. We have another one right here. So it will not be this one, for sure. That's why we always look for the confirmation with the dollar. Look at the USD cut right now, for example. There we go. Let's clean everything up here. There we go, USD cut. Dollar is definitely showing a reversal signal here on the lower time frame. Yes. Strong reverse signal on the lower time frame. This could align here beautifully with the USD cut right now. We have to be quick here. Well, not too quick, but we have to be aware. A lot of liquidity was built up here. We go to the 3-minute. We have that fair value gap here. That could be the trade here. Hybrid says I can only see 2 events this week. Yeah, it's for the free members indeed. But I need to fix that. I'm gonna fix that. I'm gonna make sure that you guys can also see that event here. You're right, thank you for sharing. Yeah, it's good that we exited right there. USD cut looking very good. We have been taking out so much liquidity already on the top side right now. We got rejected here already. Yeah, perfect rejection as well on the 15-minute here. If you guys can see this, I will show you. I will zoom in a little bit. But this particular level, this particular zone created this massive downfall right here. So we saw that reaction. We came down, we came up, we tapped, and then we saw the rejection here. This is where we are right now. We're back at that zone, strong reaction again. Go to the lower time frames. That was the 15-minute. Go to the lower time frame. We have the 3 minute, we have the 1 minute here. I like the 1 minute here. Looking for the confirmation here. Why? Well, this is the this is a clear chalk here. Actually a little bit higher, but I'll use this one right now. There's tool of reference right there. So filling up that imbalance, coming in that zone, potentially then coming down, further targeting the fair value gap. So the dollar, yeah, I like it. Let's put an alert here. Switcher broadcasters USD cut is 66% long on my FX book. Should be a good short. Thank you for sharing. I'm going to share a lot about the COT report as well. We're working on something very interesting here. Erica says, hey Lorenzo, just a quick question. When will the proper coaching begin? Friday, this Friday. We will have a session. You are part of it, so for sure. I've seen you, you've been asking it already a couple of times, so you are in. You are for sure in. I will make sure that everything will be arranged for you. This was our trade in the London session, by the way. I don't know why it's not loading here. It's not loading for some reason. Okay. Yes. This was one of our trades of the London session, indeed. I know it's a little bit blurry. That's my bad here. I don't know. It's not loading very well. These are our private live streams. We have this one as well. This is for the V2 members. A little bit of a different approach than usual, by the way. A little bit of a different approach here. USD cut is our next potential trade setup. Do you have a book or video you recommend for the COT? Not really. You can find a lot of information about the COT on YouTube. But it's something, yeah, in order to understand it, you need to pay for the information, because the COT report, you can pay for it. You need to pay for it. Not for the COT data in particular, but in order to have it beautifully arranged in a beautiful table where you can see very clear and easy, you know, this percent long, this percent short, and the transition. You can also do it manually, but it will take some time. It will really take a couple hours to process that. How often will you review the COT data? I want to do it once a week here on our YouTube channel. Where do you do the V2 lives? I start in Discord and then on YouTube, sometimes on Zoom. Okay, we're coming up here in a very rapid pace right now. Dollar. Okay. We have the dollar, we have the US dollar, Canadian dollar. Let's see if we can find something here. Let's wait for the dollar as well. Oscar says, every time I try to look for it, never find it under V2 in Discord. If you have the V2 role, you should be able to see the trading calendar. Based on the trading calendar, you can join the V2 live trading channel, which is right here. We start in here. Most of the time we go to YouTube or Zoom from there. The trading calendar is here. And this changes every week here. Patrick says, holding three trades in profit out of 4 right now. Good day so far. Great, my man. Make sure you take some profits along the way. Could also be the 2 minutes right now. Okay, I'm gonna go coming very close right now. Second layer is this breaking this level. And then taking position here. The rejection is there so far. We see the rejection right now. This is great. This is beautiful. If we break that low, we can enter and put our stop loss above that last high. Target the fair value gap underneath. Coming back into this area of demand. Close the candle here. Okay, I'm gonna enter. Done. There we go. If you break this level, I'm gonna go on break even already. Stop loss and break even when they break this level here. We broke the lower here as well. Just need to be patient right now. I have to go soon, guys, by right? I have to go very shortly. We stream for 3 hours, 10 minutes. Okay, my position is there. If we break this level, I'm gonna put my stop loss on break even. 134.180. Then we have taken out that wick. Then I'm gonna go on break even straight away. Stop loss is right now above that high. Take profit is in that area of demand. Right here. So I'm gonna go very shortly. So far, yeah, let's see how we develop. So far we're coming down. We really want to take out that candle here. That last level here. Then it's that for me will be a great confirmation to then look for a stop loss and break even and so on and so on. And take some profits already. J Daniel FX said, thank you for today's live stream, mate. Thank you, my friend. Thank you, my brother. Appreciate you, man. Okay, come on, let's go. Yes, stop loss and break even. Done. Stop loss and break even. I'm gonna take 50% off. 145. Boom. Secured, 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 ladies and gentlemen. Secured trade here. Stop loss and break even for sure. We took out 50%. So no matter what happens, we are good. We are good. What was our entry here? 134.229 here. 249. Ik zie a little bit lower. 2449. Hey Manueli Koerti, my man. Hope you're doing well, my friend. How are you, man? Okay, let me ask you guys a question. Who is in this trade and who took some profits already? Only reply only when you already took some profits. It's always about securing your position, guys. Took profits, took profits. Okay, congratulations. Amazing, amazing. Congrats. The last 1, 2, 3, 4, 5, 6, 7, 8 trades were profit. Are, of course, including partials. 8 trades, 1 break even, 7 profit. So we have not seen a loss in a while. I'm gonna close my position here in full. I'm gonna take the remaining profits here. Done. Done, guys. Happy with the profits here. Okay. That's it for today, ladies and gentlemen. All right. Thank you for today's session. Absolutely fantastic. I have to keep working. Absolutely great session today. Money's money. Made some profits. US dollar, Japanese yen, US dollar, Canadian dollar. Yeah, this was actually perfect exit as well. In regards to this one, yeah, let's see. Maybe there is a chance that the dollar can come down a little bit more. Dollar is not looking that particularly strong here. We have a lot of imbalance underneath. So yeah, there could be more downside potential. Regardless, I wanted to take profits today completely. We made roughly 2.5%. 2.3. Okay, great day today. London session for the V2 members. Congrats, was amazing. This session was also great. Have a fantastic day, guys. Have a fantastic day. It was absolutely amazing. Let's continue tomorrow again. I'm gonna be way more. We're gonna be very active with the live trading as well in our V2. Really gonna take it very deep, very personalized. It can help. It can really benefit you as well. If you're interested in that, look more information. You can find it right there. Also, we're gonna give an event. You can join our event. It starts in 1 hour and a half. It's a free event, psychology, given by one of our coaches as well. You can join, you can listen to it. It's really cool to just go into the voice chat, listen to them, and just, you know, absorb the information here. Okay? Enough trading for today. Let's absorb some information. Be part of our beautiful community. Links in the description, you can join free. Shout out to you guys. See you later. Ciao, ciao, ciao.